Welcome to TradeTheMBI.com. This is John. This report is for the 14th. Well, you can see that we had this, blowout move that began here. Well, we actually saw it much earlier and knew that, in fact, all of this back and forth here with North Korea stuff, these are the big days, was pretty much a non-event because we really didn't even break past any of the low levels. We just filled in some positive extremes that went back to, well, from a daily standpoint, that was right over here. So it was right around this level, and we went just slightly below it. And as soon as we did that, you'll find that that's where all the little wicks come from, because it was gone too far, and that was a perfect opportunity for them to, suck in some more value from it. But we reset on everything and been moving nicely. The question will be here is whether we continue with the cyan moving below the red DOC. The red DOC, meaning long-term buyers, kind of eased off a little bit, so we could still be just moving a little bit sideways. You can see the ABM now really trailing high to that level, and you can continue to see that where we would have had buy signals jump in with the updated version of what the ABM is going to be, and that's the adjustment that's going to be getting sent out. Here's the traditional ABM, just following the reset from back over here, which actually took place right there, and it's just been following all along through this interesting period with the NASDAQ being a little bit stronger in general, in the sense that the readings were better, even though price action hasn't necessarily reflected any excess compared to the ES or the S&P 500. You can see the S&P has made the new highs, whereas the NASDAQ has not been able to break out of that range, which means that if there is any move in the NASDAQ, it's only going to exponentiate the ES. And again, for the ES, we were talking about 2,500. We needed to get to the 85. That was going to be the first pull. Then once we were there, the next step would just be the press to 2,500. Now, I did say that it's never usually just a straight line to it. Sometimes it can be, but more often than not, you get the gyrations. And the euro easing off a little bit because it just that impetus pushed up there to the over 120 range is a little bit too much, and so they backed off just a little bit, but still holding up quite nicely despite the fact that it's been in a series of weak overall readings for, well, a couple of weeks now, and actually into the whole last couple of months it's been trading outside of the range here, and I expect that it's going to want to return to that range. There's, the issue, they get into this talk about core inflation and whether the EU supposedly has it and the US doesn't. It's a misnomer because the EU measures inflation far differently than the US does. Even if we do get some softening in the euro with this short signal that's right here, which we've already started to see some of it, I think you would have to break down here below this right around 117 range before we would see us move back into the zone, which would be interesting. I think it's definitely something that would pacify some of the Europeans, because I think they're getting a little anxious with these higher valuations, because it certainly will impact their exports over time. And finally, talk about long overdue. We've been talking about the ridiculous nature of this move, and I was sort of incredulous with the rise that we were seeing, and finally we're getting what can only be described as a reasonable, if not smarter, move back into, I don't even call it a range. We should be well under the 120s given the expectations for where things are at with treasuries. But that said, market's entitled to moves, and some of this was related to wanting to get into safety with Korea and the whole escalation with that. And I can fault people for doing it because it was just a crazy move in general. And here we have oil. No surprise with, I posted that article on the Skype chat talking about the rising demand and having a significant play in that rising demand. Not sure whether it can be processed or not. That's going to tie into where general distilled products are going to be. But needless to say, it's an indication that there could be some real growth happening, and that's really what we've been talking about with looking at this for quite some time now. It's really a picture of, are we going to see the growth? And if we're going to see the growth, then where we're at in the market is not even remotely excessive. In fact, it would be considered right in line with expectations. The delay in, obviously, inflationary pressures, you're going to get some ups and downs with the gold and that, but I still will say, without question, we've got these positive extremes that go all the way back to the breakout. We're definitely going to be pushing higher as that would indicate, because the oil suggests that you're going to have growth. The growth suggests that there's going to be supply demand, and supply demand means inflation, just plain and simple. The question really becomes an issue of labor and whether or not you get amnesty for illegals. Things like that are going to certainly have an impact on labor supply. The whole DACA thing and that, it's very interesting because it does certainly play into that whole question of labor and supply. So these are some of the real issues. If you keep adding to the labor pool, you're going to keep wages down, and I'm sure there may be some discussions, to Trump to say, hey, you got to weigh into the fact that what's going to happen to the deficit and everything else once rates have to start going up because of inflation. So there's a difficult balance, and who's going to win that debate is really where the market is playing. For now, they're suggesting that the rates are going to stay low, that we're going to keep pretty much an even keel with a little bit of a bump in growth, and that bump in growth is certainly going to be pushing us towards those higher levels and getting us near the 2,500 level on the ES. Not quite there yet, but very close. So if we take a look at the previous day for the ES5K, I mean, we pretty much dipped from the highs, which were a little bit excessive. We had a positive extreme going through there, refilled it, came back, and then once we got back over the 50%, sort of traded sideways until we hit the matching pre-market highs, and then just faded off that. Now we're right back at the 50%, and it's been a pretty consistent every time we get right around that 50%. We've gotten oversold and get a little bit of a turnaround. Don't have a full buy yet at this point. We have a reset though of the DOC, looking for the orange to continue lower before any convincing buy would take place at this particular point. But the fact that we've been getting up to that 95, 50, 96 range is just an indication that the market's pushing towards there. Probably going to hit some resistance right around the 98, 99, and it usually fights back and forth unless there's some significant news item surge that's going to push us through there. We got to that 99.50. Pretty much was the cap at this particular point, and that corresponds with what we had right back over here to 95.50. So it's resistance at that particular spot where obviously nobody wants to be the one pushing the trigger to get us over the top there, but that's all right. Overall, for all the gloom and doom, this has been pretty remarkably stable, and there's no real major news impacts coming out of the White House that have caused any disruptions. So all in all, I think things are fairly even keeled for now. So we'll see how it plays out. We're just looking for the continuation of that overall buy signal. So there's the long and the short of it at this particular point. As always, trade well. We'll talk again later.